Let us see if we are able to identify the nature of these accounts and then apply the rules. Under the traditional approach, capital is nothing but a personal account. What is the rule for a personal account? Debit the receiver, credit the giver. In case of an accounting equation approach, if you take what is capital, is actually a liability, or it is simply called, depends on how we are framing the equation. You could have it as asset minus liabilities is equal to capital. In capital, again we expand further, say plus income minus expense. Ultimately we had said asset plus expense on one side, right, is equal to, you can have capital, liability and income on the other. Cash under the traditional approach is what? It is a real account. It is a real account. Just to indicate, capital, normally it's a personal account and it actually denotes the account of the owner when the owner brings in money. Because we said when he withdraws money, we open another account called drawings account. Capital account and drawings both represent the proprietor's account. Both represent proprietor's account. But capital when he brings it in, drawings when he withdraws money. So in case of a capital, logically, since he usually brings in money, debit the receiver, credit the giver, this is usually a credit. Liability is also, this is the credit side, right? This is a debit side, normally. It's being a liability, it is credit. Cash, real, usually cash will have a debit balance, because what is the rule for debit? What is the rule for real accounts? Debit what comes in and credit what goes out. So cash cannot really be negative. It is an asset. I'll do one thing. We will quickly cover the traditional approach, and then the same things we will cover under the accounting equation approach. Bank is called personal. Debit the receiver, credit the giver. Usually we deposit money into the bank and it could have a credit balance if there is an overdraft, but otherwise it would normally be debit. Purchases is a nominal account. Mind you, some people call this goods and take it as real. But since goods are purchased with the expectation of selling in the current year, we have considered it as a nominal account. Nominal, debit all expenses. So normally purchases is again debit. Creditors is personal. Debit the receiver, credit the giver. What is a creditor? Who has supplied goods, he is a giver, and normally therefore this balance is this account is credited. Sales, like I said, we'll treat it as a nominal account. Treat it as a nominal account. Income account, it's usually credit, since it says credit all incomes and gains. Debtors is what? Person to whom we have sold goods and now he owes us money. So debtor is actually personal. Debit the receiver, credit the giver. He has received money, he has received goods from us. So usually his is a debit balance, debtors. Closing stock. What is closing stock? Goods which we have purchased but we were not able to sell in the current year. That is a closing stock. So the benefit of this expense, goods purchased, we will get only in the next year. So this is actually a real account. It is an asset, real account, and would actually be a debit. It is there. It has goods have already come in. Building, real account, it's an asset. Debit what comes in. Rent, rent is an expense, it's a nominal account. Rent is a nominal account. Debit all expenses. If it's a rent expense, it would be debit. Of course, if the business is earning rent income, it could also be credit. Rent outstanding. What is outstanding rent? The expense, the rent for the month of, let's say, March, we are closing the books of account. We pay rent only in April. So there is a liability to the landlord. Outstanding rent is actually a personal account. Please note, it is not expense. This represents what? It represents the landlord's account because we owe him money. This is a liability. It's a credit balance. Representative personal account. What is investments? We buy investments. It is a real account. It's an asset, a real account, and has a debit balance. Discount allowed. We allow discount. Suppose we were to get 10,000. We now agree to take only 9,800 and we say 200 we don't want. You can retain it provided you pay the money earlier. So this 200 is like a loss for us and therefore it is a nominal account. It is also an expense. Discount allowed is an expense, therefore it has a debit balance, debit all expenses. Bad debts is a loss. That's a nominal account. Debit all expenses and losses. What is a bad debt? A debtor who owes us money is not able to pay the amount. So that money we do not get. We expected to get the money, but it is now a bad debt. He cannot pay this money. Therefore, it is our loss. What is drawings? Drawings is the money which is withdrawn by the owner. So it is nothing but owner's account. Therefore, it is personal. And usually it has a debit balance because while a proprietor may bring in money or withdraw money, when he brings in money, we call it a capital account. When he withdraws money, we call it a drawings account. Now let us discuss the same thing under the accounting equation approach. What is bank? Asset. What is purchases? Expense. What are creditors? Liability. People to whom we owe money. Sales is an income. Debtor is called an asset. Why? Money is to be received. When we have a receivable, it's an asset. When we have to pay, it is a payable, it is a liability. Closing stock is an asset. Building is an asset. Rent is an expense. Rent outstanding. What is outstanding rent? A liability to pay. Therefore, it is a liability. Investment, what we own, asset. Discount allowed is an expense. Bad debt is a loss, is an expense. Drawings, what is drawings? Money which is withdrawn by the proprietor. So that is a receivable. So the proprietor has to make good that money. He has to return the money to the business and therefore it is called an asset. Receivable. Capital is a liability to the owner.